We're going to do a deep dive into the US dollar and gold. What we're looking at now is the Dixie, the dollar index, and I would like to know where the dollar is going to go to the upside. In other words, how far, to determine where I could get back into gold. Here's the gold end of day daily chart, and I didn't know where to sell it. I waited till it was getting out of this sideways action here, and then it bumped up and I sold over half of it, not quite at the top here, but somewhere right at the tops of these bars here. And as you can see, gold fell off the face of the earth here, but I want to know how far it's going to go down, and that will be based on what the dollar does. Here's all the correlations for gold to the US dollar, TNX, USO, etc. We're focusing on the gold to US dollar. You can see that it's 100% negatively correlated to gold, meaning the US dollar goes up, gold goes down, and vice versa. And there was for sure some severe panic selling on that jobs report, 500,000 jobs added. And that's a well-justified knee-jerk reaction. And you can see somewhere buried in these bars right here is the cloud conversion line in blue, and then the baseline down here in red, and the 21 EMA in orange right in between the both of them. So it's really blasted right through all of those to the downside and went back in to the bearish flag pattern here in red. And looking at all the moving averages, gold has everything going for it. If you think about it, the 21 is above the 50 in gold here. The 50 in gold is above the 200 in green. And most importantly, this EMA 126 in black has made the crossover of the EMA 315 in brown. So everything is pointed up for gold. So we're going to use two indicators down here, the QQE, which stands for the Quantitative Qualitative Estimation Indicator, and the DMI underneath it, the Directional Movement Index. And I'll try my best to explain these two indicators without getting too deep into the calculations here. Okay, the QQE is based on Wells Wilder's RSI and use the 14 bars to include into the calculations for RSI. So it's basically an RSI 14 to start with. And it uses a 5-period exponential moving average for the RSI itself. And along with the fast QQE is a slow QQE in yellow or orange there. So the 5-period exponential moving average determines the smoothing factor used in the exponential moving average calculation that is based on ATR length. ATR meaning average true range. And it uses an average true range length of exponential moving average at 27. So the fast trailing level and slow trailing level in orange or yellow, are found by calculating the ATR of the smoothed RSI over the number of periods. The ATR is then further smoothed using the additional periods Wilder's smoothing function. Then the smoothed ATR of RSI is then multiplied by the fast and slow ATR multipliers to calculate the final fast and slow trailing levels. And the fast multiplier is 2.618 Fibonacci levels, you can consider that. And then the slow multiplier is 4.326, and then we get these two lines here. And if all that went over your head, don't feel bad, because it goes right over my head too. So just basically we can treat this as RSI. So when RSI goes over 70, it can be considered oversold or in a strength zone. And then when it goes under 30 in green, it's, oversold. So oversold, overbought, strength indicator. And one could use it for divergences too. And I've found that when the fast in blue crosses above the slow QQE, you can see that price is in a upwards movement there. And you can use the fast QQE for the divergence, like I said, so I can't draw an arrow into mark, but picture it right here. And then we draw an arrow up to this valley right here. So now we have an upwards trajectory. Then if we go up here right around this bar and draw the arrow, you can see the downward trajectory. So what this is a bullish divergence, since the arrows are on the bottom. So the next indicator down here, directional movement index, DMI, is actually a little easier. It also uses the 14 period for all of the calculations, and it uses a DMI plus and a DMI minus, so the minus in red and the plus in green. So the DMI plus is calculated from a comparison of the highs on a series of consecutive bars, which they're using 14, versus the true range. And DMI minus is calculated from the lows of the series of consecutive bars versus the true range. And these values are used to calculate the ADX, which is the average directional index. So the ADX in black here will tell you when the instrument is trending either way, up or down. So when the ADX is headed up like this, that just means it's trending. And in this case, if we look at the valley here and go up to here, you can see that it was trending upwards up here. And then at the peak here, we'll move up to here, you can see that the ADX was headed down, and that all that means is it wasn't trending. As you can see, it was somewhat going sideways if you look at this peak and this peak. And then over here at this valley here, then you can see it started another upward trend, and then again at this peak it wasn't trending as the ADX was headed down, and you can see it formed a basing pattern here. So let's look at one more of this peak here on the 28th. Up here you can see where it printed the wave 5, and dollar fell off the face of the earth. Everybody started shorting it, and you can see, even though there's this tremendous down move, it's not trending as it went back up here, so it's not a straight downwards trajectory. And then it got down to here, this valley right here. So that's where this came back and printed the D wave, up wave B here. And then it went into a deep dive downwards trend, and you can see the trend. And again, it stopped trending here around the 14th, right about here. And you can see it went sideways here. And then when it went back up here to print this D wave, down wave 4, you could see the tick up on these two bars. I should have this zoomed in, but you get the idea. And then it wasn't trending until it started going down, and then it started trending again as the ADX was going up. So there's this downdraft here, and that brings us to today, where it looks like the trend down has halted or stalled right here with these two valleys and peaks here. Alright, finally zoomed in, we can see this. You can see it at this bar here. Then it resumed the trend down, and the ADX went up, and it started to plane out and stall right here as it was going sideways, and that brings us to today. So back in the QQE, where the fast has crossed over the slow, yes, that's an indication of a directional change somewhat. As you can see, it went up. What you really want to wait for the DMI in green, the plus DMI, to cross over the minus DMI to corroborate that it really is possibly a trend change, a directional change to the upside. So we'll look back here to August 15th, 2022, where the plus went over the minus in red and started moving up, and you can see that the direction was changed to the upside and corroborated by the ADX. And, the trend ADX, changed to the going sideways here as there was some up and down movement, but still the plus was moving up, and that's where it peaked right here and then started heading down. So you couldn't panic right away, even though the QQE gave us a early indication where the fast went under the slow, and it was up in the nosebleed area at 70, but the plus down here in the DMI didn't go under the red in earnest until right about here, and you can see that there was this sideways movement here as indicated by the ADX not trending. It's headed down. All that means it is not trending. It's going sideways. And then it finally went under here in earnest, where the plus crossed under the minus. And then you can see after it printed that B, the rest is history until it brings us to today. And you can see the plus went over the minus here. And there was this little trend or an up move here. And you can see the QQE, the fast went above the slow here as an early warning that that could happen. But this is the one you pay attention to down here, the DMI plus and minus. And now we're going to look up here at the dollar price action. You can see it printed the sequential and combo buy setup 9 end count, and then some days later it became perfected. It got the combo and sequential perfection as it went under the bars 6 and 7 here. So once it got under there, then it printed the perfection arrows here. And you can see it didn't happen by much, so the low was 101.50 where the arrows printed, and bar 7 was the lowest one of 6 and 7, and it was 101.52 for a low, but nonetheless the perfection arrows printed, and that got a lot of traders' attention when that happened. And the buy setup count gave us this buy TDST level for combo and sequential at 103.93 up here. And now I'm going to turn off a lot of the other indicators so that we can look at megaphone. We'll keep the wave on there. And lines. Let's see what it looks like when it's cleaned up. Okay, that's a little bit better, cleaned up. Turned a lot of them off, so now I'm going to zoom into this area now. Okay, and first we'll look at lines, namely the supply lines. You can see there's several qualified supply lines, one here, one over here, and another one here, so a series of 3. And you can see that it became qualified, went above the supply line, and actually was confirmed on the next bar. It was a close higher, but those who have been shorting the dollar or missed out on shorting opportunities up here got on board and shorted the dollar, so it went over sideways again and then got above this supply line, and it did not become confirmed, but it was qualified, and then the shorts came in again and drove it back down again and did the same thing here. There was a qualified supply line. Actually looks like it got confirmed. Let's see, close 102.01, 101.91. Wasn't confirmed, but then the shorts did not come back in, and it's been going sideways, and you can see the trend changed on the ADX in black down here. And then on Friday, this supply line missed becoming qualified by a fraction of the penny. I can't even display that here. I tried to get it into mark to display fractions of a penny, but it was disqualified because of the true range. So if you subtract the high and low here and get the true range and then add it to the high, you can see that it was like, this is actually higher by 1 penny. You can go ahead and do the math. It was higher here by a penny, but I think that's because it was fractions of a penny, so this became disqualified, the supply line. So we won't consider this a fading opportunity, this disqualified supply line, giving it the benefit of the doubt, and see what happens up here at the next one. Now I turned off lines, and we'll take a look at megaphone. So it has printed a megaphone by 7 end count down here, meaning the megaphone pattern has ended. You can see 1, 2, 3, 4, 5, 6 up there, and then 7, but no 6 under here like back here. So all that means is that there was a contrary megaphone pattern developing, where this one was 1, 2, 3, 4, 5, 6, 7, and then kept traveling up. Got a couple of locks on the 7, but eventually ended here. But the 6 was here because there was a contrary pattern starting at 2. 1, 2, 3, 4, 5, 6, and it's not going to show the 6 until the 7 down prints. So you don't know that until this happens. So then there was another megaphone leg up here where it ended, but we don't have that over here. And because of that 6 missing over here, the other contrary megaphone pattern, I question the run up. If there is a run up in the dollar, I question how far it will go. I do not believe it's going to have too many legs to the upside running, so I think it's a limited upside because of that. So we'll wait for the DMI plus to cross above the DMI minus, if it does, and then take stock of where the dollar is there. And here's the dollar monthly chart. You can see the downdraft when we hit 115 up there. Look at that. It's 1, 2, 3, 4 months of solid down move. And looking at the KSTs, you can see the short-term KST crossed its signal line and is headed to 0. So I want to see what happens when it hits to 0, possibly coinciding with that DMI crossover plus over minus possibly. And then the intermediate term KST is doing pretty good, well above 0. Looks like it wants to roll over, but has a long way to get it to roll over. And the long-term KST has just crossed above its signal line, and it's well above 0 also, just like all the other ones here. So the dollar could have legs to run a little more to the upside, but I believe it's very limited because of this. Now we'll go drill down to the daily chart. So where I'm looking at to possibly get back into gold is up here at this horizontal line at 103.42. You can see it really went sideways here and was testing it a lot, and finally went under down to this horizontal line about 101.42, and that's where we're getting this bounce up here. So I'm looking at 103.42 and take stock there about gold. I'm really not interested in buying into the dollar, and I did not buy into the dollar down here. I'm more interested in replacing gold. So maybe buy a little gold here when it hits 103.42, if it does, and then take stock of what happens if it cracks above that. Then it's back up to about 104.51, somewhere in this area here between the two support and resistance lines there. So back to gold. Here's the monthly chart with the Andrews pitchfork going back to 1975 or something, I believe. Yeah. But this is where our target was, that middle tine of the fork, and we bought here and just recently sold half up here, so now I'm looking to get back in. And here's the daily gold chart, and I've drawn another ad hoc tine here right in between the middle tine and bottom tine of the Andrews pitchfork, and you can see price is actually gone under that. So now I'm looking at these support and resistance lines right here, somewhere around 1870 or so, right here, a little above 1882, I think it might be. And then another one, if it breaks through that, a zone here. So this first red line here is right at the bottom of this candle, low 1872. And then this zone is at the bottom of this candle at the top, 1829, and then the top of this candle back here on August 10th, 1824. So then I drew the horizontal line over there. And we'll keep a close eye on the EMA 126 in black and the EMA 315 in brown right here. If that EMA 126 in black starts hooking around and wants to go under this brown 315, then all bets are off. But as long as this stays above that, this 126, and looks like it wants to keep moving up, then I'm a buyer in gold, hopefully picking the right spot. And here's a chart of the EMA 126 and EMA 315 looking back to 1974. But I'm really interested in this area here, where you can see it made it up above that 315, then hooked around and kind of mumbled along the 315 here, and then headed up, and then came back down below it, and then back above it here, and just took off to the races. And this is very similar. So you can see the run up, and then we come back down, well, kind of mumbling around the 315, but you get the idea. And then a leg up like here, and then a dive back down below the 315, and then a hook around and went back above it and took off to the races. So when those who are talking about gold going much higher, I can understand that. 5,000, I can't fathom that. I just take one step at a time, so 2,000 again and beyond a little bit, possibly, but the similarity here and here is quite uncanny.